Going over the top 51, the latest results through December the 7th. This is a portfolio that we've been looking at the top 51 strategies from the All Strategy Access from 2020 without any of the new strategies. We talked about this last week. We are looking at the latest results. This market continues to be tricky. We are kind of in a no man's land, it feels like, with volatility being low. Stock indexes at all-time highs. While there is still so much uncertainty, unusual scenario in my opinion, this is where we stand in the markets. This is where this top 51 is for this month, down 99.7750, and we talked about this from the perspective of a new portfolio taking the top 51 strategies for 2021 that we anticipate for 2021. Some of these have not performed that well in 2020 and some have, and we've also added profit targets to the Cobra 3s. This is where it is. So it's been down at this drawdown level many times. It's recently made an equity peak, so it's either going to bounce here or it can make a lower low in this drawdown curve. And so conservative approach is to see if this drawdown holds in December while we are in an unusual time period. Here are the drawdowns. It's down here frequently. I love the uniformity of this because there are lots of time periods when it comes down here to these drawdown levels. There's not just a few. Sometimes you'll see a portfolio with just a few tests of the drawdown, of the maximum drawdown. This has many tests of this maximum drawdown. And so right here, right at the $10,000 level on this drawdown, and it has a worst case drawdown of 16,000. Actually nearly 17,000 if you take a look at it. Let's take a look up here. 16,846 out of a $10,000 drawdown. It's about a $7,000 risk to worst case drawdown. And so it can have losing months. Here's a losing month in July of 2019, 15,000. But it has only had one losing month before this since that time. And so we're picking strategies that we like going into 2021 that have also done well in 2020. October was down. November would have been up. And so down 99.77. So is it like a spring that's going to bounce back? Or will it come down here and make a worst case drawdown? So conservative approach once again is to see if it holds this worst case drawdown and makes it new equity peak, or aggressively get in here on this drawdown if you have the capitalization to do that. And these are all the old strategies that we've had. What can we do? And I've copied and pasted. It doesn't represent this, so I'm going to delete this. And so let me expand this. This does not include any of the new strategies, but I'm going to show you what would happen if you added some of the new strategies. For example, EVP2 Gold, which hit its $1,200 profit target yesterday. VSD NQ. Want to add this strategy, gap continuation with the bigger stop loss, gap continuation in reverse, tick wave, E-mini S&P. Let's just add one of those. VIX OC on close, and let's not add any more. There tends to be many new NASDAQ strategies, so let's not add too many because these are breakout strategies. This is a breakout, this is a breakout, this is a breakout. And so we'll keep the original night trader and the VSD NQ, and we'll only trade one of the tick waves for the E-mini S&P. And you see it's still down about that much on the month, and it would not have lost in October. So it would have been up in October with the new strategy. So this is a combination. This is a conservative approach of adding some of the new strategies. The top 51 did not include any new strategies. And then we've shown you a portfolio with a lot of the new strategies, and this is just a portion of the new strategies. So if you add a portion of the new strategies, this should be through 12/7. So this is updated through 12/7, and so if you add a portion of the new strategies, you are still down on the month, and you're in this normal drawdown. You see a larger drawdown overall over time. It's not as uniform. Some of the new strategies are more geared towards the recent market environment. The worst case drawdown is 23,000. This number is not as big, but you have more diversity with strategies that work well the last 4 or 5 years, but not before that. So you see So for example, you might see more drawdowns back here, the longer drawdowns back here than up here, because some of the new strategies only work the last 4 or 5 years. So that is one way to set it up. Your July of 2019 would have been minus 11.5 instead of minus 15. But you see, every month so far this year would have been profitable with this setup. And so, will December be an outlier? Will December have a worst case drawdown and then be a losing month, or will it bounce back? Are we in sync? So that's why I say December is a research month. We're conservatively watching this in what feels like a very unusual no man's land, to be at all-time highs with this much Fed stimulus. Things ought to be different than they are, in my opinion. Markets should be more freely traded and have more two-sided price actions. Very hard to find a short strategy or a short trade that works at all. Any down movement gets mean reverted to the upside quickly. Buying dips has been the best way to do this, but market cycles are generally, you don't typically get to buy dips for 12 years, since 2009. That stimulus, with a few exceptions of some quick bear markets that have come right back on steeper dip buying. But that is just my opinion. We work to trade what currently is, and what has been. In this portfolio looks back to 2008, because it's difficult to trade before 2008. Many of the markets have gone electronic, and that alone is a fundamental difference. Itself is for mostly electronic markets versus mostly pip markets prior to 2008. The stock indexes were more electronic prior to 2008, but many of the commodity markets did not become as electronic until around 2007, 2008. So that is the analysis that we have for these portfolio setups. Again, we've updated the portfolio calculator through yesterday, so you can see the other potential portfolios for January 2020 as we are working to sync up for January 2021. We may still have uncertainty in January around the election, around coronavirus. But that is the latest that I have for you today, and here are some of the latest trades.